Recording in progress.
So today we want to take control accounts for the accounting AS level class. So for control accounts, when we talk about control accounts, it records all the ledger from the books of original entry. That means it records all the totals from the books of original entry. So why do we have control accounts? So here they said that control accounts record the totals from the books of original entries. We have a control account for each ledger, so we can identify arithmetical errors when they occur. This process is not so we use control accounts to reconcile. We use it for reconciliation whenever we feel that there's error in our ledgers. So we have two types of control accounts. We have the trade payable control accounts and trade receivables control accounts. But before we go further about the types of control accounts, first we have to talk about the advantages of control accounts. Why is it important to have control accounts? What are the benefits of control accounts? The first one here is mentioned here is accuracy. Control accounts can be used to eliminate errors that occur in posting entries in the personal account. So it's with control accounts, it helps us to eliminate errors, and it means that it can be reliable. That's the first point. The second one, it said improve the speed of decision making. By employing control accounts, we can produce a trial balance without having to add up each individual trade receivables account or trade payables account in order to include those balances into our trial balance. With control account, it becomes easier for us to prepare our financial statements because we'll be able to put the figures of trade receivables and trade payables. We can summarize it and place it immediately into the debit side and the credit side of our trial balance. That's the second point made there. So as soon as our trial balance balances, so we will be able to prepare our financial statement. So that's why it becomes easier for us to take decisions as businesses. The third point is about internal control. So when we talk about internal control here, we're talking about checking and balancing, ensuring that things are done the right way. So with internal control, fraud can be prevented using control accounts because it's going to be prepared by those employees who are not the one that prepare the ledger. So that's internal control. That's the third advantage of control accounts. Then what are the problems that we could encounter using control accounts? Number one, not all errors can be detected. So even though control accounts aim to prevent fraud and facilitate finding errors, it does not mean all errors can be identified. There are errors that cannot be identified. These are the errors that do not reveal in the trial balance. So our control account, yes, it prevents fraud. It reduces errors, but some errors that cannot be detected, like errors of omission, errors of commission, might not be detected using control accounts. The second problem about using control account is that control account may contain errors itself. So if the quality of the workers, so here, we said control account is done by internal auditors or by those who did not prepare the trial or who did not prepare the ledgers. But the problem about it is that if control account is prepared by those who lack the expertise of producing it or of making it, then like those who lack the expertise of producing it or recording it, then it could become an error. It could become an error too. So if it is not prepared by those who have the expertise, who have the skills of preparing control accounts, then there's likelihood that it contains errors too. The third point here is about cost. Additional time and effort is required to maintain control accounts. So as soon as a control account helps us to find errors because we felt that there's error in the ledger. So with control account, we're going to have to waste more time and also spend more to be able to detect the errors, and things are not just right because you're not getting it right the first time. So that means time is going to be wasted, money is going to be wasted. So that takes us to transfers of the transaction to the control account. But before we talk about the transfers of the transaction to the control account, I'll first need to talk about, we can talk about it anyway. So for the transfers, here they said the use of control account. What are those things we put into the control account? We have our trade receivables, the individual trade receivables, and each for the cash book, and also we have our returns and revenue day book. So your revenue day book, your revenue returns, your cash book are all that goes into the control account for sales. Then we have the purchases, which you have the purchases, credit purchases, we have purchases, returns, and cash. So that takes us to, here they talked about trade receivables control account. But before I go into trade receivables control account, And I think I can even go into trade receivable control account. So I wrote, this account is for trade receivable control account. This account is used to control the trade receivables account and contains the account of customers who have bought inventory on credit. So we use trade receivable control account for our credit customers. So that's what we use trade receivable control account for. And what are the entries in our trade receivable control accounts? On the debit side of our trade receivable control accounts, we have our balance brought forward from the previous year. From the previous month, we have our credit sales on the debit side, we have our dishonored check on the debit side, we have our interest overdue from customers, we have it on the debit side, and we have refunds to customers on the debit side. Then on the credit side of our trade receivable control accounts, we have the balance brought forward from the previous year, which is a credit balance. We have our returns inward, that's sales returns. We have bad debt written off or recoverable debt. We have discount allowed, which is linked to sales, and we have cash or check received from customers on the trade receivable control account. Then we go to trade payables control account. What do we use trade payables control account for? For trade payables control account, we use it to record all ledgers of our credit suppliers. So we use trade payables control account for all ledgers of our credit suppliers. So what are those items on the debit side and what are those items on the credit side of our trade payables control account? On our trade payables control account, we have on the debit side, we have the balance brought forward from the previous month because we already have suppliers from the previous month. If we have a debit entry, that means they are owing us. And if we have a credit entry, it means we are still owing some of the suppliers. Then on the debit side, again, we have the return outward. So these are the suppliers, that the inventory we bought that we are returning back to our suppliers is going to be on the debit side of our return outward. As on the debit side of our trade payables control account, as return inward is on the credit side of our trade payables control account. So we're going to have on the debit side again, we're going to have payments to suppliers. We're going to have discounts received on the debit side of our trade payables control account. On the credit side of our trade payables control account, we're going to have our balance brought forward from the last month. We're going to have our credit purchases. We're going to have refund from suppliers. We're going to have interest charged by suppliers on the credit side of our control account. Then sometimes we have what we call the contra entries. So why do we have contra entries? Contra entries occur when there's a set-off. That means we have a credit supplier at the same time. The credit supplier is the same as the credit customer. So when we are having a credit supplier which is also the credit customer, then we're going to have a contra account which is set off. So how do we prepare, how do we post contra in the trade payables and trade receivable control account? Contra is posted on the debit side of our purchases ledger control account or trade payables control account, and on the credit side of our sales ledger control account or trade receivables control account. So that's all about that. Then we have a question which I'm just going to treat. Then we're done with control accounts. So here, activity 1.